Good morning, everyone, and thank you very much for joining me. This is the morning market review. My name is Russell Shaw. It's Friday, it's the 9th of December. I'm a senior market specialist at FXCM, and I'm just going to go ahead and bring up our high risk investment warning. I'll keep this on the screen for a few moments. Anna's saying there's no audio. Can I just double check? Can you guys hear me? Can you guys hear me? Testing 1, 2, 3. You can hear me, Mia. Okay. All right. Morning to you. Just okay. Okay, cool. All right. Let me just send Anna a message here. Okay. All right. Here's our high risk investment warning. I'm just going to bring in the market commentaries disclaimer as well. I'll keep this on screen for a few moments. And our references MarketScope 2.0, Trading View, and Forex Factory. Let's just quickly go through to Forex Factory. And there is the the producers price index coming through at 3:30 p.m. ZA, which is going to be 1:30 p.m. UK. It's usually not the most market moving of numbers, but it is very important because we want to see if it continues to moderate. The whole idea is we're looking for a crossover on a technical basis. We're looking for a crossover of PPI to move underneath CPI or underneath PCE, and I think that would be a good sign of inflation potentially topping, because that's what we saw in the stagflationary environments of the 70s. We'll take a look at that in a moment just to show you what I'm talking about. We'll also get the preliminary University of Michigan number, forecast at 56.9. Just going to bring that up. Hey Howard, morning to you. Nice to have you on the webinar as always. Hey Anna, can you hear me now? Just want to double check. Can you hear me? All right, you can see the consumers are still very much feeling the brunt of the macroeconomic environment, and we want to see if this starts ticking up. Okay, we want to see if this starts moving up. This is just the preliminary numbers, not final, but let's see if we get closer to that 60. Okay, they're all important. It's only forecast at 59. Okay. Let's go through to trade view. This is the real rate, and I want to just put some points in here. Let's put in a peak. Put in a trough. Here's the lower peak. Okay, here's the lower trough. Okay. And here's the next potential low peak. Okay. So the real rates do seem to be moderating. Okay, I'm going to put in, no, I would suggest this is lower peak. Okay. Hey, Anna, can you hear me now? Just want to double check. Can you hear the audio? All right, and then we want to see, do we get a lower trough here or do we get the, okay, cool. We want to see if we get the lower trough here. Okay, so do we get a higher trough or lower trough? If we get a higher trough here, I would suggest that's not so good for risk on markets. Okay. I'm going to put this as a question mark. This is not going to be so good because that would mean that the interest rates have stopped declining, and if they've stopped declining, well, that's going to hurt the time value of money. In other words, when I say hurt, it's going to put pressure on the present values of potentially what we're looking for is signs of bottoming. Okay, so again, we want to just keep an eye on this higher trough here. Let's just take a look at that PPI, what we were mentioning a little earlier. So if we just go US PPI, I'm going to look at it on a year-on-year basis. Okay, and I'm going to add CPI to this. I'm going to add core CPI. Core inflation. Okay, we want it to be year on year as well. We're going to add it in as a new price scale. Okay. I just want to, let's make this red. Okay, and just take a look at the 70s over here. The idea of this black PPI dropping below the red core CPI over there, over here, and even the directional bias. So the directional bias should be down. This was pretty much a good indication of the moderation of inflation. So you can see that the PPI is moving in the right direction. We just wanted to come underneath that that core number there. Okay, so it's coming out today 3:30 p.m. ZA 1:30 p.m. UK. All right. So we took a look at the real rate, and that real rate was showing signs of moderation. Whether we get the higher trough or not now is our next project. That's what we've got to try and assess. But yesterday we noted was that key outside day that happened on Wednesday, and there was money to be made yesterday. You can see that the Nasdaq did in fact move up yesterday and resisted. That might be a possibility. We are on the day trading layout. Here is the fast stochastic moving up. So the filter is to the upside. We go through to the hourly. The hourly has been really nicely in zone 1. Okay. Take a look at the stochastic on the hourly. This is the fast stochastic. It's above 50. Okay. So this is now meeting the filters, so to speak. We can go down to the 5-minute, and here I was let's just see 333. I was active in the market down here. Okay, so I was trading on here. Right. This I'd shut down for the day over here, but you can see, and this was, so the I wanted to see the real rate, still the real rate, I was happy with that outside period. Then I wanted to see the daily, and I wanted to match it up with the hourly, and then I wanted to see the stochastics here. Okay. All right. So how are we looking for it today? Still looking potentially as a bullish day. We just want to keep an eye on that real rate, or starts off with a real rate, right? And then what we can keep an eye on here, this looks like a nice pullback, and we can start tracking for our three conditions with the for the reference candle, right? What are they? Okay, so we want to see effectively the downtrend. Okay, we want to see the downtrend, so we've got that. But at some stage, we want to see the downtrend end. And we want to see, is this going to be the reference candle? So now we're looking for a candle that's got the lowest low in at least 3 candles. When I say at least candles, there must be at least one candle to its left, and there must be at least one candle to its right. Okay, and it must close above the reference candle's high. Okay, once we've closed above the reference candle's high, well then we've got the fast stochastic pointing up. We've got the stochastic above 50. We've got a nice position in zone 1. We could potentially be looking to see if the short-term traders are going to align themselves with that. Let's just take a look at the US dollar. All right, so you can see this is what we put in yesterday, right? So the US dollar was moving to the downside. It's still moving to the downside there. I should actually take this out. I don't think we need that. I think it's confusing the issue. All right, and here, this is a bit tricky. Okay, so right at the start of the day, there is a cautionary signal that has crept in. So I was looking to see if the Nasdaq is in fact going to be bullish, which it is according to the daily filter and the hourly filter. The 5-minute filter, we're looking for that pullback. We're looking to see if we're getting the reference candle. Ideally, I would like to see money coming out of the euro, but it looks like there's actually money that's flowing into the US dollar. That's not too comfortable for me because the greenback is effectively a safe haven. So I've got to be asking, why is money going into the safe haven if I'm looking to go into the risk side of the market? So this is not sitting too comfortably for me. Ideally, what I would like is I would like the candlesticks to fall back into zone 3. Okay, and I'd like the stochastic to fall into this side of the market. Okay, so I want to come back down here. This is an ambiguity that stepped in. I don't like trading if there's ambiguities because which side of the market is right? The risk side of the market or the haven side of the market? One of them's got to be wrong, and I don't want to be on the wrong side, right? Let's take a look at euro. All right. So you can see that we are moving into this. We put this in yesterday. Okay. It moved nicely in the direction that we hypothesized. Here is the ambiguity again. Quite as I suppose it is. I was going to say it's not quite as ambiguous as with the greenback, but most certainly is. It's starting to dip into zone 2. I don't like that. And we've got the stochastic here dropping below 50. So I asked myself, why is money flowing back into the US dollar? Is it because there is a risk off, or is there going to be a risk on move? Let's take a look at NASDAQ again. So the NASDAQ looks quite, it's set up nicely here. Let's take a look at DAX. DAX also looking very interesting. Okay, so we're sitting nicely in zone 1, and we've got this nice stochastic bar 50. Let's just take a look at the daily, and it does look considerably like it wants to go risk on. But then I got to ask the question, well, why is the dollar gaining capital? Okay, that's a bit odd. So if we can see money rotating back out of the dollar, if we can see money rotating out of the dollar at the same time, DAX lifting off at the same time, NASDAQ lifting off at the same time, Euro is gaining against the dollar, well, that would be kind of synchronized as opposed to ambiguous. Let's take a look at the daily chart here. The cash market is going to open now, so we'll just keep an eye on it. This is an odd candlestick here, isn't it? You can see the market's uncertain. Here we've just opened. Let's see what's going on. So why is this? This is all the pent-up orders that are triggering, all the orders that were open that can be filled and are filling, and of course the algos are now hard at work. So you can see that's what's happening here. Okay, and really nice. Let's take a look back at the greenback. Yeah, I don't like this. I don't like the fact that the dollar is getting money at the same time money is going into the risk market. There seems to be some sort of mixing between the risk market and the haven market. I think we just want to get some clarity there before we go to the next step and start looking for candidates. But this is really something that is I'm not too comfortable with. Let's take a look at Euro. Okay, see, Euro is also going into zone 2 now. So we just need some clarity in the markets. A little bit of fog setting in just at the start of the day. I'd really like it to clear up and see, well, where's the money flowing? Risk on or risk off? Okay, so that's kind of the question that we have right at the beginning of the day. All right, if there's any questions, go ahead now and type those in. Any questions, please go ahead and type those in. All right, excellent, Howard. So it looks as if we've covered quite a bit of the outstanding instruments, so to speak. You've got my email address. Anything that crops up during the day, you can send me an email. I want to wish everyone a good day ahead. I want to wish everyone a very good weekend ahead, and we shall then touch base again on Monday morning. Thank you very much, guys, and speak to you then.